JD, we were supposed to have an interview today.
We were indeed.
We were supposed to talk about MinRes. Moz, you've let me down. But hopefully we can reschedule to later in the month, Moz. But until then, we're without content plan today. So I know you hate to be unprepared when it comes to content. It irks you, doesn't it? Like you're
With most things, yeah, not just content.
You're uneasy about a lack of preparation, and because we've got nothing planned for the show, but we've got to put out a show today. So I thought we're just gonna make a few phone calls and see what happens. No agenda. They don't know what we're calling them, but just gonna call a few friends of the show, a few fund managers that have been on in the past several times. A, don't know if they're gonna answer. B, they don't know I'm calling, and C, don't know if they really want to be recorded on a podcast when I do call them. So we're just going to see how this goes, because this could either be excellent content or it could be awful content. And
we're really becoming sort of like call-in radio type program.
The other way around is a bit more desperate when we're calling people.
Yeah. No, I like it. We're gonna by the sounds of it, call some much more switched on people than us. And well, I've got a lot of questions to ask. Right, we're coming into quarterly season. We're in a super volatile market for commodities. Things are bouncing up and down all sorts of directions, as same goes for the stocks. So yeah, and capital raisings. There's been a shitload of capital raisings lately. So
mate, so you are prepared. I'm not even going in with questions. You've got questions. Anyway, we'll see what happens.
Let's give it a go.
First up, Rusty. Let's see if he answers me. Hey mate, sorry. Oops. I'm coming through.
Wire it in.
Hey mate, can you hear me now?
Yeah, got ya. Yeah, didn't know what happened there, buddy.
Oh, neither do I. I was trying to connect. You're gonna hate this, but we had an interview planned today, and that interview has cancelled. So we're going rogue, and we're trying to make a show out of spontaneously calling a few insightful fundies like yourself for a 5-minute little bit of off-the-cuff commentary, which does mean that I do have recording equipment right now. You're not live. We can always cut things out. You can say yes, you're interested, or B, you're not interested. But
Yeah. Okay, so you're just gonna try and sort of stitch something together, on the fly. Always happy to help, mate. Always happy to help. I'm just walking to my car, hence the background noise.
Yeah. How good's that?
Yeah, what do you want to chat about?
I want to know what is most interesting to you right now, mate.
Big picture, macro, I reckon, is the most fascinating dynamic and maybe the hardest riddle to read. Where is Trump at? Where is Elon at? And it's this amazing tension between a desire for pure disruption, which is Elon, versus pragmatic realism. US fiscal and thereby implications for gold and other commodities, etc. So that to me is the most sort of interesting thing going on out there in the broader landscape. And happy to sort of tease that out a bit if you so desire.
I very much do desire, mate.
Rusty, I'm here as well, mate. I would love to flesh that one out with you. Just quickly on the tariff aspect of that. We're in that sort of quiet period. Do you think the tariffs come back in a big way, or we've kind of heard the last of that in a kind of disruptive fashion?
Yeah, our view. And apologies, guys. I'm just in the vehicle, so apologies if the audio is not ideal. Our view has always been that the tariffs were really an overstatement of where the US really could go. And so, yeah, I think that's been borne out, and I think where we're at now is probably more likely where things truly land. That means there will be some version of tariffs, but how they're applied, they'll be nowhere near as aggressive as the US postulated that they might be. They just can't do it. They're too constrained. And the big tell on that is the 10-year. And, we all saw what happened when they really tried to squeeze everyone at the same time. And so, you know, other other sovereign nations can play that game too. And the squeeze point back to the US is clearly the 10-year, and they require foreign jurisdictions to fund their sort of fiscal um, situation. So the reality at the moment, like, how are we seeing it? It's it's interesting and it's complicated, but and all of this, is always just probabilistic estimations of future events. No one owns a truth or a crystal ball here. What does it look like really? Well, Elon's done a lot of hard work on the disruption, and that is all meaningful, but it will take time for Doge to play out because Trump is more of a realist and knows that that level of disruption is actually going to put you in a place of high risk because and then Lynn Aldrin and there's other very good macro brains out there who speak about this well, highlights you can actually create a sort of doom loop with that. You can disrupt economic growth so much and tax receipts so much that you actually worsen your fiscal situation, even through sort of austerity and you know efficiency at the governance level. So I think that work's important, but it will take time to implement. And I think where Trump is more pragmatically landing is no, I'm going to spend my way out of this in many ways. I'm going to come to the efficiency at governance over time. I've exposed now the truth of things, for want of a better word. We can now come at that over time and with AI, and we will profligate still. We will still spend more than we have. We will look to financial repression to reduce the debt, which is effectively tolerating a higher rate of inflation, pushing hard for a lower cost of capital, which he's clearly doing with how he speaks to and of the Federal Reserve chair. And so, but you can never admit this. And so I think the most likely path is that sort of financial repression, and the safety valve on that, right? Where that is a dangerous place is if inflation goes to like 5 or 6%, that's kind of okay. Goldilocks is probably more like 4, cost of capital 2. But if it's 5 or 6, then it can then run away to like 8, 10. Suddenly you might have some hyperinflation, and then you got a real problem. And again, this is guesswork, so please, I hope the listeners don't throw too many stones at me. You can then use, get your efficiency dividend through ongoing reform of governance and waste and fraud, etc. Implementation of AI to governance, and more broadly, implementation of AI across both the public and private sector. And that implementation then brings you efficiencies. And so you get productivity growth as the natural brake tapper against any runaway inflation. Does that make sense?
Oh, I'd love to see that. I'd love to see the government spend reduced from productivity gains in the government sector. My God.
Yes,
let's
but it
embrace
has
that.
to happen. It can't happen all at once, right? And there's some great pieces out there on this. Like, if you do it all at once, which is Elon's natural place, right? That dude just does not fuck around. He's like, problem, solution, go. He is the ultimate disruptor, which has an enormous amount of value to all of us across, Western society and beyond. But there is a pragmatic reality to that. The pace of change and the level of disruption when you're talking about such fundamental things as governance, there are natural realities to how quickly you can adopt that. And my sense is perhaps Trump is a lot smarter than he looks. And I've wrestled with this over the last few weeks, even like being kind of disappointed at moments where I'm like, oh, fuck, he represented so much. Now he's not delivering. He's not supposed to be expansionary, but he's going after Iran. The big, beautiful bill is anything but beautiful. It's fucking big, but it's just more of the same. But then on reflection, I sort of look at that and I'm like, is he kind of the man for the moment, which is an awkwardness. There's an inherent awkwardness in that because there's so much to dislike about a lot of it. But is that more the pragmatic needle threading that needs to happen? And if that environment is the environment we are most likely to get, again, right, this is all just probabilistic estimations of future events. If that is the most likely path we walk, then that inflationary environment should, by and large, be very healthy for capital flows into commodities. Now, that's a great thing, particularly for gold. Um, where it gets more complicated again, though, in commodities is, in the here and now, what does the real world demand picture look like? And it's a bit soggy. Tariffs are still a thing. They are coming. They will dampen some level of consumption. They're not going to be as catastrophic as previously prognosed, that's for sure. But they will be somewhat disruptive. And the reality for things like steel and steel derivatives is that China has had a property market implosion. It's occurred over 3 or 4 years. And all of that steel that no longer gets consumed in that sector has then been exported in, the overcapacity of goods production. Now, tariffs will be disruptive to that. So my sense is that in the very, very short term, you still want to be a little bit cautious. And I know like today's market said anything but that. Today's market is like, nah, fiscal flows are on, buy commodities because they're under-owned. It may be that because commodity producers are on such shitty multiples already, maybe the sector can re-rate even in the face of sort of, average commodity pricing environment for 6 or 9 months, while China's a little bit soggy and still getting its policy setting sorted because it's such an under-owned space. I think, a day like today sort of shows that you can have, big ripping rallies in lithium and met coal. Nothing fundamental to, last night changed the environment for producing lithium or met coal. These are just, financial flows and short covering and the like. But they matter. So what am I saying with all of that waffle? I think the real world demand for commods in a broad sense is still tricky. It's still, you're going to want to be commodity selective and very much stock selective. But there is lots of value down the curve, and we've seen lots of takeouts recently. We've had New World and Xanadu both bid for on our books recently. I think Jupiter gets a bit. There are these obscure ones that are getting swallowed, and so there's lots of value down the curve still. So you still can hunt, but hunt intelligently. It's not a shotgun type approach, float all boats type of environment. But the broader macro setting, I think, is good. I think a lower USD will be good ultimately for emerging markets and lowering their cost of capital. And that will eventually flow into what is most important, which is like real world demand for commodities. And at the same time, with that sort of maybe 12-month view, it should give China time to get their policy setting better to actually soak up commodity demand. So we are like mid-long term, remain very constructive. Gav Cal do great work on this. There's still 1 billion odd people to pull out of poverty in Southeast Asia. There's so many great reasons to like Southeast Asia and the supply of commodities into that dynamic. In the short term though, there is some choppy water still to navigate. And I guess the one frustration I've got is like I actually thought the sell-off in Feb, I think it was really healthy. And for us to see lots of flow of capital into commods, maybe we needed to see that sell-off across that concentrated US and concentrated tech space. Maybe we don't. Maybe there's enough capital out there to still have that space buoyant and see, what is ultimately probably the most under-owned asset class globally, being materials and energy, catch a bid. I don't know. My sense is I'd rather see some of that capital blow off in US and tech and then make its way across. So I think ultimately, again, short term, because of that run in US tech and stuff, that's kind of a little bit unhelpful because that that provides sort of bigger picture market risk. You could easily have the Dow pull back again.
Just one quick one to add into that, Rusty. When you think in regards of being fully invested or with a bit of cash on the side or hedges in place, how do you take that, everything you said there, and piece it in the portfolio?
Nah, great question. And are we walking the walk is really the reality of that question as well. So we went to the lowest weight cash I think I've had in 13 years. We went to basically zero weight cash in Feb, with a view that things that were already cheap were just suddenly getting fire sailed, and that this hyperventilation around tariffs, ultimately we couldn't see how the US could affect anything like what they were sort of postulating. And I think we got that call correct. Since then, obviously, we've had things move up. We've had a few things taken out. So we've moved to, I would say we're sitting around 15% cash weighting at the moment. And yeah, again, just hunting opportunities very much with the rifle, not the shotgun. We expect fully that some of our small caps will either be taken out or re-rated. If there's liquidity through those processes, then we'll naturally take a bit along the journey. Maybe a bias at the moment slightly towards harvesting a few things and adding a bit more cash. But we're pretty comfortable around that sort of weighting. Maybe it's 15 to 25% would be a healthy place to be. If everything runs away, you're still going to participate in that. And if we do get a bit of a US correction, then amazing. You're going to get a chance to go shopping again. So yeah, I don't know if that is that us having our cake and eating it too. Maybe, I don't know.
That's great, mate. I get that I've interrupted your day, so I'll let you go after this last one from me.
No worries.
Where can you still find value? Like, where are you looking for value right now? If it's you got to be careful.
You got to go sift through a lot of shit. As you guys know, we love our data and we love using AI. So that's a big part of our investment process, an increasingly large part of our investment process. You still got to go then do the human work on the back of the filtration through the data. And it's kind of sporadic where we're finding it, like obscure places. Like I would argue, think outside the square, look at something like a Jupiter, that is just such a screamingly obvious thing to get taken out. And if you're wrong, you're going to get paid a nice divvy while you wait. So I couldn't sort of point to just some like obvious sector. That's hunting. You got to go hunt. You got to go look under rocks others aren't. And that's probably just a name that sort of represents that. If I give you one example.
I like that phrase. Look under rocks others aren't. Yeah.
Awesome.
Thanks, mate.
No problem, boys. Thanks for the call.
Appreciate it.
Way overdue for a proper catch up. Let's do that. I'm away next week with the family, but let's do it on the way back.
Awesome, mate.
Awesome.
Okay.
Have a good one,
legends.
mate.
See you, mate.
Cheers.
Ciao. Love you. Bye.
What a legend. That's funny.
So good.
Sorry, Money Miners, for the hiccup in audio at the start there. I thought I was connected via Bluetooth, but I wasn't. And then I had to just get the USB cord while Rusty was still talking to hook him up properly. What an absolute legend. Every time he talks about, getting a bit futuristic, what I think of, mate? I think of the futurism embraced by Derek Hurd at Sandvik Ground Support.
I was thinking of the same thing, mate.
Mate, he is, in fact, I think he actually made and designed this app for Sandvik Ground Support himself. I'll just let him talk about it.
You've tried your hand at app development.
Yes.
Tell us a bit about that journey.
Yeah, that was pretty exciting, actually, and it's really taken off in the past few months, actually, the app development. So my vision was always to have it as a customer engagement tool. So not just simple data sheets, on a catalog, tools that customers can use, reference materials. And so the app these days, has all the data sheets, the technical data sheets, the safety data sheets of the product. But it's got all these things. If you want to do a resin encapsulation calculation, what size cartridge you should use in the hole from installation, it's got that capability. If you're designing a mesh sheet to assert a certain opening, you've got that capability. pull test capabilities, conference papers, news events, featured products. So it's quite an interactive tool. But yeah, it's been a bit of a passion for mine for probably 5 years.
Downloading it right now, JD.
Yeah. App Store or Google Play, it's all there.
Yeah.
Get on board. Go Derek. Go Sandvik.
Okay, I'm gonna try Dan Porter now.
Let's go.
Not too bad. I'm literally just sat down boarding a flight.
Oh, really? Where are you flying to?
Yeah,
I'm with JD, by the way, if you're wondering whose other voice is around.
Hey Dan, how you going?
Ah, cool. Good,
Yeah.
mate. How are you?
Yeah, going well. Where you headed, mate?
I am just taking off from Sydney, heading back to Brisbane.
It's probably
So,
not a good time to chat then.
there have been better times. No,
Yeah.
that's all right. Are you guys maybe free tomorrow morning, something like that?
Yeah, mate. Let's chat then.
Yeah.
That works. I was just calling because we don't have a show today, so we're just like calling up a bunch of random fund managers to get like a 2 second, 1 minute view that maybe they have that they'd be willing to just share off the cuff. So if you're on the plane and you've just got something on your mind that you wanna hash out, then by all means feel free to air it out right now.
Like just anything or
what's on your mind, markets related right now?
What's most engrossing to you?
Where do these coal markets bottom out, I reckon?
Yeah.
You're seeing a lot of blood in the streets now. Like we said, Bowen in massive strife. The bigger guys I know haven't really started to lay people off yet, but they're starting to.
Yeah.
You've seen a reasonable amount of product coming out of the market as well, like Carmore's offline and what else? There's been a few other mines off, I guess, all Bowen's mines are offline. But all the Anglo stuff offline as well. So there's been capacity coming out of the market. So we must be getting close. But is it just going to drag along the bottom here? And if it drags along the bottom, who's got the most balance sheet risk? What's Coronado going to do? They're in strife.
Oh, looks bad. Looks bad.
Yeah. So usually these things don't last too long. But if you had another 4 or 5 months of this, which I think we probably will, then a lot of these bigger guys could be start to get into a bit of trouble too, like your Whitehavens and Stanmores and those types of guys.
What do you think of the valuations looking across at the moment?
Ladies and gentlemen, today's guest
good question. Some of them are ridiculously, like some of them are factoring worst case scenarios, right? And I can see why. But then some of them, like a Whitehaven, seem to be still a bit punchy, I would say, for where coal prices are at the minute. Yeah. Anyway.
All right, mate. That's a wicked thought.
Is that cool?
That's great.
Okay.
I can hear the flight attendant in the background, so
yeah.
I should really let you turn your phone off before she tells you to turn your phone off.
Right.
So.
Yeah, exactly. No, cheers, boys.
Thanks, safe flight, mate.
You don't mind if I use that audio?
Best, boys.
That's okay. Cool.
Yeah, go for it. Yeah, go
All
for it. Yeah, cheers, mate.
Thanks,
All
legend.
right, so bye.
Thanks, Dan. I love his Queensland patriotism. Like the first thing on his mind is coal. he lives, breathes, feels
The basin.
Yeah, love his insight. So it's a really interesting point he makes.
Yeah, super beaten up. And I couldn't help but think, when Dan starts talking about these sorts of plays and this sort of commodity, I think of energy, I think of power, and the next logical step is cross-boundary energy.
Cross-boundary energy.
Are you on the same page with me here?
I'm 100% on the same page with you. In fact, I feel energized talking about them, mate. Just like a mine site would feel energized with reliable power from like hybrid battery energy storage systems, be it solar, be it wind, be it hybrid with baseload power all together, mate. That is a solution that cross-boundary energy implement all across the globe.
Mate, they really do it all. I felt that same sort of level of energy, level of power after we caught up with the main man himself, Tim Taylor, just last week. And, it goes beyond what you just said. It's not just reliable power. It's not just hybrid solutions. It's them looking after the bills for you, right? They can take the CapEx off, make it an OPEX type thing. They can really get creative and find the solution that you need to work for your mine site, to work for your project when you're getting that mine up and running. So look no further, cross-boundary energy for all your energy and power solutions.
Get in touch with Tim Taylor. Okay, next up, mate, I'm going to try Hedley Widdup. No bites from Hedley. All right, who's next on the hit list?
Keep scrolling.
I'm going to try Tom Woolrych.
7 a.m. in Germany.
Yeah, it says online.
Morning, Trav.
Hey, mate. I'm with JD, by the way, just in case you're surprised.
Hey, mate. How are you?
G'day, JD.
We're just busy reading your book, of course, at all hours. Rocks, fossils, formations through time. In case you didn't know that one. No, we actually don't have a show today, right? So we thought we would just spontaneously call, like go through our contacts and call just smart investors like yourself and ask for 5 minutes of insight, and we're going to patch it all together and see if that saves us the
Put it out.
Yeah, maybe we'll learn a thing or two in the process, you know. Yeah.
Sure.
So really, what I'm asking for is, do you have any insight?
What's on your mind?
On what?
Well, I don't know. Whatever's on your mind. What have you been thinking about?
What's on my mind? This morning, I'm going to model the Coca-Seb drill hits. You probably saw them. So
Well, yeah, they're flying.
that's what's on my mind.
12 grams
Unbelievable. I
over
haven't
50
seen that.
meters. How good?
Exactly. So, yeah, that's gonna chew up my day or my morning probably, and then insights.
So many people remember your episode on Money in Mind, the first one, and they just think, "Fuck, I owe Tom a beer for WIA." That's what they think.
Yeah, there's a couple of blokes that follow me on Twitter. It's like, "Oh, I've already sold." Yeah, shout out to those lads. They know who they are. And yeah, no, it's a great story. I spoke to Joseph yesterday as well. So it's super exciting that they're working through the PEA or scoping or whatever you call it, depending on what Borsey you look at. So yeah, no, that's going to be a killer resource upgrade. I'm thinking 3 million ounces, and then we'll see, the spreadsheet guys can start chipping away and seeing how much money it makes.
Yeah,
fantastic.
It's gonna be a lot.
What are the other explorers around town that you've sort of been excited by over the past couple of weeks with results out or maybe results coming up?
What have I been looking at? You caught me right at the start of my day. I think
I checked that you were online before I called, by the way. I didn't want to wake you up in case you were.
Yeah, no, that's okay. I reckon I'm super excited about Pampa Metals.
Oh yeah.
I spoke to Joe, their MD as well yesterday. So they're wrapping up a financing that was 16 cents and it's traded up to 19 cents, I think. So I think what people saw is they like Pampa, but they want to make sure it was financed, right?
Yeah.
That they had cash in the kitty. And the next big unlock for them is just to prove that they can drill in Colombia. So, if they can, or when they get drill rigs turning, Pampa's going to be one to really watch because, I've seen the core photos. It's a confirmed porphyry system, right? So now you just got to work out how big it is, and you can get all that for, I want to say, $30 million at current market cap. Yeah,
that's an interesting one. There's no doubt, mate.
It's exciting.
Yeah, and anything. I know you've just got like a good eye for Geo Alpha. Like anything that's a bit unloved at the moment. That you think there's value in that you've done the work on.
Yeah, one that's hyper illiquid. Let me look here. 25,000 shares traded yesterday at 29 cents. It's called FINX in Finland. It's another beloved part of the world for me.
Yeah,
not too far to get to, up to the central Lapland greenstone belt. If some smart people around the time RUP.TO was being discovered, they just said, okay, here's a greenstone belt. There's nothing geologically different between parts of Canada or parts of Australia and Lapland. Why haven't there been more ounces found? And boom, they found 5 million ounces at RUP.TO. So I've always sort of bought into that idea that there's going to be a lot more ounces to be found in Lapland. So FINX is the ticker. They're these ambitious Finnish people put together some really good trenching results last year, just listed, and they're going to go drill it. So what I'm looking at is for these jaw-droppingly good trench results, if that can convert to a drill hit. So yeah, again, we'll know pretty soon. I think August or September, and yeah, but that's so super liquid. We haven't put that one into the fund. We just did it. I've just done it on PA.
This is just PA, yeah.
I guess.
Yeah,
exactly. So if that's a confirmed hit,
yeah,
we'll be the first people to invest in the next financing.
yeah. Wow. Well, you probably shouldn't mention it because maybe it'll be more expensive then.
Yeah, well, I don't know. Funds are less price sensitive. I think the market cap's 15 million or something. So what normally happens on Discovery Day? If you saw Onyx Gold, I don't know if you guys saw that one.
No, tell me about
it. In Canada on
another Canadian one. So it gapped up 30% on Discovery Day.
Yeah.
But it didn't really matter. So it gapped up to 32 cents, and now it's run to $2, right? So the financing was at 70. So going back to what we spoke about, was it 2 years ago now? You can, if you do the work after the discovery for that first financing, that's a super entry.
Yeah.
And Finland, just quickly as a jurisdiction, there's obviously plenty of big names in and around there, but the road to getting that permitted and everything probably a bit misunderstood down here. How do you see that?
Yeah, it's super difficult. So there's multiple challenges. You've got the indigenous population there. They herd reindeer, yeah. The what are they called? The Sami. So they have these vast reindeer herding properties. So basically the northern end of Lapland is pretty much out of bounds. And then so if you're lucky and you find something in the southern end, around where RUP.TO are, then you've got to go through a really long, difficult but robust but fair permitting process. So that's RUP.TO are stuck in that sort of permitting hell, but they'll get bought out. It's a extremely high quality discovery.
Shout out Crewy, who's running that now. Good old Graham Crew, former guest.
I don't know. Okay, legend. And the other issue is it's a European-wide sort of nature reserve. It's not a national park, but they call them Natura 2000. So there's big patches of Natura 2000. You can work in them, but the regulations are a lot tighter. So you need to do a lot more work, spend a lot more money.
Yeah.
And the other issue in Finland for juniors is just the holding costs, the rents. It can be several $100,000 a year. So if you're 10 million market cap and you want to spend, you raise 2 million, you want to spend $1 million on drilling, and then they whack you with a $200,000 land bill, you're going to burn through the treasury pretty quick.
How do you feel about being in some smaller names when there's a bit of macro uncertainty?
Okay. Yeah. So the Geo Alpha commodity beta strategies, the barbell strategies, was kind of designed for that.
Yeah.
For that sort of
it's a portfolio
outcome, right?
Portfolio answer to that, as opposed to
exactly. So what we can do, and actually we haven't, is start trimming the big gold positions. So they're hyper liquid. You can get $1 million in and out really quickly. But things like WIA, no chance in hell that I'm selling that now, right? So, yeah, WIA might not fly as if gold loses $200, WIA won't fly as hard as it would, but it still hasn't, we haven't achieved our investment outcomes that we want there. So, yeah.
Awesome, Tom. Any parting thoughts for us or for the audience?
No, happy hunting. Let the geology lead.
Awesome, mate. Thanks for taking our call at what is a pretty early hour over there, mate. Always great to chat.
7 a.m. first. You're my
first call.
My first stop.
Yeah. Buy his book. Buy Tom's book. It's on the wall. Rocks, fossils,
Exactly.
formations. Yeah.
Cheers,
right,
mate.
Thanks for all that. That's been really fun. The back and forth on that.
Yeah.
I really enjoyed it. Thanks, guys.
It's been hilarious. If Antonio escalates, I just know I will win.
Yeah. Fair warning. I'll make sure he gets it. Yeah.
All right, mate. Catch ya.
Have an awesome
Thanks,
day,
guys.
mate. See ya.
Cheers.
What a legend.
I found that as fruitful as ever chatting with the likes of these super switched on guys, completely unprepared.
How did you feel? Not knowing what you were.
Mate, I'm not the one on in the spotlight there. We're getting the insights from the people that think about this stuff all the time.
What did you think, Money Miners? Did you like that?
Yeah. Tell us what you think of the different sort of format, the different style, and if you're a fan, yay or nay.
Should we let the Money Miners call in randomly? Is that too rogue for you, JD?
We've always got the power of the edit, mate, so it's in our hands. Mate, a massive thank you to our partners for making this show possible. Our thanks go out to Mineral Mining Services, Rounded, Sandvik Ground Support, and Cross Boundary Energy. Hooroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read out a disclaimer.